Headline inflation rise to 14.23% in October 2020. Incomes and consumption of Nigerian households remain unstable due to COVID-19. Oil prices edge up on hopes OPEC Plus maintains supply curbs. Plus, Asia markets bounce as countries in region sign giant trade deal. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Nigeria's inflation rate rose by 14.23% year-on-year in October 2020, as against 13.71% recorded in September 2020. This is contained in a Consumer Price Index report released by the National Bureau of Statistics on a month-on-month basis. The headline index increased by 1.54% in October 2020. This is 0.06% rate higher than the rate recorded in September 2020. The Composite Food Index also rose by 17.38% in October 2020 compared to 16.66% recorded in September 2020. Core inflation, which excludes the prices of volatile agricultural produce, stood at 11.14% in October 2020, up by 0.56% when compared with 10.58% recorded in September 2020. Meanwhile, the rise in the food index was caused by increases recorded in prices of bread and cereals, potatoes, yam and other tubers, meat, fish, fruit, vegetable, alcoholic and food beverages, and oil and fats. It appears the incomes and consumption of households in Nigeria stay unstable when compared with the pre-pandemic period. This is according to the Nigeria COVID-19 National Longitudinal Phone Survey 2020 fifth round, implemented by the National Bureau of Statistics in September 2020. This survey is the fifth of a planned 12 rounds of the COVID-19 National Longitudinal Phone Survey of households in Nigeria. The fifth round, which was conducted between September 7 to 21, 2020, contacted 1,856 households from the baseline and 1,773 households were fully interviewed. World Bank teams from the Development Data Group and the Poverty Equity Global Practice provided technical support in conducting the survey. Barely 2 months to the operationalization of the African Continental Free Trade Area, AfCFTA, Nigeria's Federal Executive Council last week approved the instruments of ratification of the agreement, with the AfCFTA being the world's largest free trade agreement aimed to expand intra-African trade through better harmonization and coordination of trade liberalization and facilitation across the regional economic communities and the continent in general. The ratification marks another major milestone on Nigeria's AfCFTA journey and paves the way for the acceleration growth.
Effective date ought to have been July 2020, but as a result of the pandemic, it was postponed to the 1st of January 2021, and all member states were given up to the 5th of December to ratify the agreement. That's precisely what Nigeria did. So effectively, we hope that by 1st of January 2021, the agreement will come into force.
To get a better understanding of the ratification and its implications for Nigeria, I have in the studio Professor Jonathan Arimu, a professor of international economic relations from the Covenant University in Otta, and a member of the technical working group on the Nigeria Impact and Readiness Assessment of the African Continental Free Trade Area, and currently a member of the National Action Committee on AFCFTA. You're welcome to Business Express.
Thank you very much.
I also have Francis Anatogu, the Senior Special Advisor to the President on Public Sector Matters and Secretary, National Action Committee on AFCFTA, joining us virtually. You're welcome, Mr. Francis.
Thank you very much.
Thank you. Well, Prof, the world's largest free trade market has taken a step closer to reality. How much ready is Nigeria in this all-important, all-time business deal?
Thank you. I think I need to congratulate Nigeria for taking this wonderful and giant step. You just discovered that right from the beginning of this entire African economic integration process, Nigeria was part and parcel of it. In fact, the Lagos Plan of Action kickstarted the idea of a continental import substitution industrialization kind of an approach. And then it was equally concluded a decade later in the Abuja Treaty, that's African Economic Community, African Economic Community Treaty. So I congratulate Nigeria because we have always been at the forefront. And we are ready. I can let you know that the country is ready, and we appreciate government for taking time to be able to make sure that everything is prepared in a way that Nigeria will not actually have negative implications from the implementation of African Continental Free Trade Area. Luckily, the Secretary for the National Action Committee, who is number one person in the time of readiness, is going to be a discussant. So I think that's a very wonderful thing. So we are ready. Nigeria is not afraid, as people have been saying, to be able to actually go in. After all, you go to all these countries in Africa, you see Nigerian company, even without economic integration, and they are doing well.
The government might be ready. Is the private sector ready? It's a two-way thing.
The private sector has actually made their reservation initially, but they got to know the benefit of it. And when they make their reservation initially, that was why the impact readiness was actually set up, and Francis was there. And the impact readiness study was conducted, and when it was submitted, the private sector was there and said, yes, with this study, I think that we should be able to be ready. Then the president said, now, even if everybody appear ready, let us set up the National Action Committee to make sure this readiness is put together in a package with which we can ratify. And that is what had been done until recently, just last week, when the president said, okay, with the activity of the National Action Committee, I think we can go and ratify. So the private sector have been on board. All of us are together.
Okay, Mr. Francis, you must have heard Prof's submission. He is proud that you are part of this program. We're also glad to have you. Well, talking about the readiness of Nigeria for this continental market, the red flag is still on. Talking about Nigeria's borders are close to its neighbors. Does it not in any way affect our readiness? And how ready is this readiness?
Okay, thank you very much. I think part of what informed the concern earlier on is enforcement of rules and compliance to rules, not just by Nigeria, but all the parties to the agreement. And the border closure that you mentioned was as a result of, to some extent, non-compliance to the rules, the text and the spirit of the rules of ECOWAS, for instance. So this is an area that is being resolved, and at some point the border will be opened. Now, in terms of general readiness, I think, like Professor Remo said, for a long time we have been clamoring for diversification away from oil. We have been pushing to on our backward integration agenda. Now, when you do all of that, but you do not have market to sell it, then you won't achieve much, which is why the AFCFTA is very critical for us. It is for us providing the market for those goods that we produce. Now, are you 100% ready? You can't be 100% ready. But this is a strategic project. This is transformative. You just announced the inflation of 14%. In the past 4 years, we have witnessed the devaluation of Naira. Now, the businesses that we're talking about still depend on imported capital goods. With the devaluation, that means that they find it more difficult to afford those machinery that they need. But with exposure to export trade, then they hedge. So they earn dollars, they earn their foreign currency. So they hedge their wealth erosion due to a foreign exchange risk. So in terms of readiness, it is a marathon. Even the agreement, yes, start of trade will be 1st of January, but it will take, in ECOWAS, it will take 10 years to achieve the full liberalization of the 90% of tariff lines. But we have, over the past, this administration has focused a lot on infrastructure. It's still focusing on it. We focused on power, and we have improvements. But we can't just wait and say, let's have all the improvements and then we turn the light switch on and then it will happen. It doesn't happen that way. Now, the AFCFTA agreement we've been negotiating for a number of years now. It was initiated way back in 1991. Even the recent free trade agreement that was announced over the weekend in Asia took 8 years. So if we wait for 8 years, if we wait for us to be 100% ready to negotiate a free trade agreement, then we will not achieve the objective that we desire.
Okay, Mr. Francis, agreed. There is no waiting for this to happen. Like you said, it's a marathon now. We have to start now. And no matter how slower we are, we should cover a whole lot of space. In covering this, if the borders get to be open to our neighbors, there is this protectionist moves that it's not only Nigeria that is involved. We have Kenya as leader of its own bloc. We have South Africa. Then we have the French-speaking countries who try to form these alliances, and from what we are seeing now, like they seem to be much more prepared to take over this market. Is it the way it seems? Is it the way I'm seeing it? And if it is, what are the strategies to ensure that as we're getting big time as the giants that we are?
So what we found from the impact and readiness assessment is that no African country is self-reliant. No African country can produce enough to dominate the market of another. Really, what you find is that in the first instance, the African products will start being more competitive than products from outside Africa, which is a good thing. That is trade creation. So, and when that happens, even for us, importing the raw material that will come from African countries, it will be cheaper to import, and then our cost of production will go down, and our price of our products will be more competitive. Now, this is when you talk about the different countries and how they are positioning. The truth is that yes, we are getting into this. We need to build trust. And the only way you can build trust is by starting and solving the problems as you go along. We are used to trading with non-African nations. We have issues. We have the mindset that was bequeathed to us by the colonization. So we prefer non-African countries. But these are some of the things that with regional integration, with continental integration, some of these things will start to fall away. What is also clear, and I dare say that even with Benin Republic, that or our neighbors, the linkage between our economy and their economy is very, very little. So for the AFCFTA, I'm working deliberately targeting growth in regional value chains, which means we are linking our economy. As we grow, you grow. So then minds will change, attitudes will change, behaviors will change. But it is so it's not just liberalizing. The benefit is not just liberalizing. It's about actually mobilizing the collective the collective capabilities of all the African countries to grow ourselves and grow our economies and make us very a formidable force on the global stage.
Thank you, Francis. Prof. Aremu, you had his conclusion on this. So the point now is, Prof, can you let us in on the prospects of this market if it comes full swing?
Well, thank you once again. I think Francis has done a lot in trying to let us know the wonderful background on where we are. There's serious, huge prospect with respect to African continental free trade area. As I said earlier on, you can see already even without African continental free trade area, you have the Dangote, you have UBA, you have Guaranty Trust Bank in all these countries. Now, with continental free trade area, they will have opportunity to be there legitimately because they are now able to set up their branches, their subsidiaries, as well as their associate companies. That we can see the emergence of a type of continental transnational corporation as a sort of African continental free trade area with their headquarters in Nigeria. You see, hitherto we have transnational corporations from Europe that are dominating Nigerian economy. But right now, as a sort of African continental free trade area, we are now going to have continental transnational corporation that will have their headquarters here and then network among so many countries, taking a lot of substantial input in their production activity from their affiliates. When I say affiliates, I mean either branches or subsidiaries or associate companies. And then equally getting market from all these companies and then selling among themselves. So the market is huge. The opportunity is wide. So in terms of trading in goods, wonderful. In terms of trading in services, I expect a lot of opportunities. That is an area, particularly services, where Nigeria we have been doing quite well, right? And I believe also that as policies are put in place to be able to make sure that we tidy up the various policies, that we allow effective trading services, particularly when you talk of mutual recognition of agreement of our practitioners in all this trading sector, to be able to be well recognized in other countries, then they can penetrate easily. So, mighty opportunities emerging from
Okay, talking about
area.
opportunities, how ready is the private sector in Nigeria to key into this? Talking about the quantum of investment, can you also give us figures, more like in by 2030, 10 years into this trade, what do you see as volume of trade?
Well, quite a lot of figures I imagine, but they are adjusting now. But I see that within the next 10 years, African continental free trade area will allow us to be able to be more than 4 times the present trading arrangement we are having among ourselves. Right now, the trading arrangement is less than 15% across African member states. So I'm seeing a situation that within 10 years, this will move from 25 to 30% of intracontinental trade. And that will enhance greater opportunities in terms of employment creation, in terms of practical integration of activities, in terms of what Francis said, which he said value chain. What you are producing here is what the other person want to be able to engage as an intermediate product in further production to the market. And then you can see sort of vertical integration backward and forward, as well as homogeneous integration as well. So, wonderful opportunity, I imagine.
Okay, Francis, listening to Prof on the prospects of this market from now to maybe in the next 10 years, you agree with me that the Naira has suffered some form of devaluation from 2016, and now you have the latest inflation figures. Do you see this market, when it kicks off, do you see this erosion being managed and us selling the Naira on a higher note in this continental market?
Okay, so I think there are always two sides to a coin. The devaluation of the naira means that it's easier to sell. Our goods are cheaper. So yes, we can now export more as long as we have the products that we need to export. So so it is really to our advantage now, being where we are. So, and I don't expect it, and with that, really, I think what we now need to make sure is that we produce as much as possible to export it to the African market. Now, in terms of your question earlier regarding the quantity, really, the Africa trade value is about $1 trillion per annum. And so this is the value that we only take about 14% of. And this is just trading goods. Trading services is perhaps half of that. And we have a lot of these services being offered from outside Africa. So really, if for us at the National Action Committee, and we are in the process of developing our strategy for AFCFT, the question we are asking is, can we grow our intra-Africa trade to a $50 billion per annum trade? Which sectors would that come from? We've done that with agriculture. We are having the workshop for digital technology on the 19th. We are having transportation the week after, on the 23rd to 25th, and we'll be spending a full week with the manufacturing sector, trying to figure out, which products, which markets, what do we need to do, from the 7th of December. So really, the market is there, and the zeal is there. Already, like Professor Remo said, we already have many Nigerian businesses operating out there. Be them in the transportation, be in financial services, be them in fintech. Fintech is like a classical example of where we are.
That is to say, in all of these sectors, Nigeria is ready for January 2021 with the strategies that are being put on ground to ensure that we don't just take off smoothly, but we sail and soar to the level that we should as giants. Thank you so very much, Mr. Francis Anatogu, SSA to the President on Public Sector Matters and Secretary National Action Committee on AFCFTA, for sharing your thoughts with us.
Thank you.
Okay, and back here, Professor Aremu, we understand your role in ECOWAS and now the AFCFTA. Thank you so very much for sharing your thoughts. This is not the end. We are going to be talking more of this some other time.
Thank you.
You're welcome. Well, moving on, it was a historic trading week as the NSE All Share Index posted its largest daily gain in more than 5 years on Thursday, 12 November 2020. The ASI rose beyond the set threshold of 5%, triggering a 30-minute trading halt of all stocks for the first time since the circuit breaker was introduced in 2016. Bosiri Abel reports.
The NSE All-Share Index and market capitalization for week ended 13th November 2020 both appreciated by 12.97% to close the week at 35,037.46 and 18.3 trillion naira. Meanwhile, a total turnover of 4.5 billion shares worth 58.7 billion naira in 47,140 deals were traded by investors on the floor of the exchange. All other indices finished higher, with the exception of the NSE ASM index, which closed flat. The financial services industry led the activity chart with 3.73 billion shares valued at 35.4 billion naira traded in 25,894 deals. The conglomerate industry followed with 437.8 million shares worth 771.2 million naira in 1,864 deals. The third place was the consumer goods industry with a turnover of 373.6 million shares worth 7.8 billion naira in 7,471 deals. The top three equities were Zenith Bank, FBN Holdings, and Transcorp Hotels. They jointly accounted for 1.4 billion shares worth 18.83 billion naira in 9,537 deals. A total of 986,941 units of exchange traded products valued at 4.6 billion naira were traded in 62 deals, as well as a total of 13,332 units of federal government bonds valued at 17.1 million naira traded in the week in 19 deals. The summary of price changes saw 69 equities appreciated in price during the week, 12 equities depreciated in price, while 80 equities remained unchanged. Boss De Able, Business Express.
The stock market again declined to open the week on a negative note. The all-share index this Monday lost 0.69% to end Monday's session at 34,795.82 basis points, with the market capitalization ending the day at 18.181 trillion naira. 668 million shares worth 7.849 billion naira exchanged hands in 10,319 deals. The top three equities were Zenith Bank, Transcorp, and FBN Holdings. Well, note we end this episode of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizX. Business Express returns Tuesday by 9:30 a.m. Be safe.